Welcome to our special episode of Max Homes Real Estate.
Homes real estate. Wow. So what's special, Max?
Uh,
Why we are here today?
we are here to give our viewers some breaking updates about the new mortgage rule changes starting as of December 15th.
Yeah.
So, our folks who are actively and passively looking to get into the real estate market have an informed decision. What is going to happen. First is about our rate cut change, a rate cut that we
Mhm.
received, Bank of,
Yeah.
and then about our mortgage rule changes.
Okay. Sounds good. Excited to see what we
Yeah.
have.
So without further ado, let's get started then.
Okay.
Right. First is we got another jumbo rate cut of 50 basis points as of December 11th.
hmm
That means our policy interest rate has come down to 3.25.
Correct.
And our prime rate has also come down. From 5.95 to 5.45, the prime rate. Okay. Now, what this means is, we are still we have inflation of 2%.
Correct.
And, what the BoC said is we are hit a neutral rate, right?
Yeah, that's right. We have hit the neutral rate, which means it's no more restrictive and no more stimulative. Is what a neutral rate means. And the one of the communicate. I mean, one of the things that we observed when they communicated this rate cut last time is that they changed the communication in such a way that we they are not guaranteeing any more rate cuts. And what they specifically said is the rate cut may be more gradual in the upcoming announcements. So what does it mean is that we may or may not get a rate cut, first of all, and they may go for an unexpected pause to their rate cuts and to see how the economy is reacting to these rate cuts that we had already. So they made already a total of 175 basis point rate cut last year, and this is gonna and the rate cuts or whatever the rate increase, whatever the change that we have in the mortgage market, it's gonna be it's gonna take some time to reflect that in our economy. So I think BoC would be more keen to watch the other data points that are upcoming before the next rate cut announcement, and they will make those decisions one at a time. So right now the economists are nothing. I mean, they can't predict anything right now because it's all dependent on the data point. I mean, nobody is really sure about a rate cut coming in the next announcement, or even they are not sure if they pause the rate cut or not. So that's what exactly it means. The rate is neutral now. The rate is no more stimulating the economy or no more restricting the economy. So it is interesting to watch the next rate cuts coming from Bank of Canada. And I think we have the timeline with us,
Yes.
Max, right?
Yeah.
Can you help us?
Yeah. So the next Bank of Canada announcement is planned for January the 29th. So by then we should have the inflation print for the month of November and December. So the inflation print for November will be released on December 17th.
Okay.
Similarly, for the December inflation print will be published on January 21st. So we will have those two data points. Also, the unemployment for December will be released January 10th. So we have those data points that will, play a role in the next rate cut.
Okay. So if any viewers out there, like please subscribe to our channel and get to see our videos, because we are releasing the videos on a bi-weekly basis, and we are talking about all these data points whenever they get released. We are talking through it. We are analyzing what is the impact on those data points on the upcoming rate decisions. So we'll continue to track. So please continue to watch our videos as well.
Yeah. Moving ahead, This is about the mortgage rate changes that are kicking in as of December 15th. So, the two major points is for the mortgage, for the insured mortgage, the limit was 1 million previously. Now they have pushed it to 1.5 million. So we'll deep dive into what that means in terms of the minimum down payment required, and we'll show you a grid what is current and what is the next, what is new minimum down payment required. Similarly, regarding the amortization, for the first timers as well as for new build, the amortization was 25, and starting December 15th, it will be pushed to 30 years. So there is both pros and cons with these changes. We'll also review the pros and cons with these two mortgage rules kicking in.
Okay.
All right, coming to the minimum down payment required. So if you look at the grid, the grid is split into the price of the home. Previous, what was the minimum down payment required and the dollar amount. Similarly, the new down payment percentage required and the dollar amount. So if you look at it, for a property up till 500,000, you need minimum 5%, which is $25,000. There is no change in that bracket. Now, any property between 500,000 and 1 million, previously, actually there's no change there as well. So you have to bring additional 10%. So you should bring 50,000 on that. However, anything from 1 million to 1.5 million, previously you had to bring 20% down. Now you don't have to. Now, you just have to bring 10% for the amount from 1 million to 1.5 million. So which is 50,000. So if you add all these down payment, you see the last column, you'll see that what you need is $25,000 plus $75,000 for a property under $1 million. You can buy it with a minimum of $75,000. Similarly, a property valuing at 1.5 million, you can buy it with a minimum down payment of $125,000. Now, previously, for a property of $1.5 million, you had to bring $175,000. So basically, there is a cut of $50,000 to buy a property up to $1.5 million.
Yeah. So basically, for me, it's pushing more demand towards big price bracket properties, right?
Yes.
Especially in between $1 million to 1.5 million.
Yeah.
And the dollar amount, this breakdown is is very helpful because the dollar amount is so clear that if I have right now 125K with me, so I can go and bid a home which is valuing 1.5 million.
Correct.
And again, it's percentage. So the dollar amount that we had put it here, just based on the maximum threshold amount. If the amount is is less than the threshold amount, then that you can calculate based on the percentage.
Yeah. Just to put another spin on this numbers is previously for a $1 million property, you have to bring 20% down. Now, for a $1.5 million, you just have to bring 8.33% down. So that's
So it was not 20%, like I think 11 point something, and now it got reduced to 8.83, I guess, right?
Right.
Yeah.
So that's that basically opens up the pool of buyers who can qualify. And again, this is a minimum down payment. Again, when you go to get a mortgage, they will qualify your income to see whether you can really make payments based on your credit score and other things.
Right.
So this is only about minimum down payment we are talking about.
And also just to note that we rounded these figures to 500K, but it should be 499 because once it is 1.5 million, then it goes to the next bracket.
Right.
So we are talking about 1.4999 value, right? Yeah.
Right.
Okay, sounds good. Yeah, I think now we can talk about the pros and cons of these rule changes.
Absolutely. So here is a highlight of the pros and cons. So
Mhm.
talking about insured mortgage limits rising to 1.5 million. Obviously, the pro is we don't need 20 percentage down payment for 1.5 million dollar homes.
Yeah.
Basically, the amount you needed is 8.33 percentage of 1.5 to get into the home. And plus, what does that mean is you don't have to, if you the dream home that you have is 1.49, you can still buy it. So that means your affordability is going up.
Mhm.
Some of the cons that we have is with the increased price, you're basically taking more debt over the period. And also, if you look at the amortization that they have, if you're tapping into 30 years amortization, your monthly payment comes down.
Mhm.
And that means you can buy a bigger home or a home with a better amenities and stuff.
Right.
However, you'll be paying a you're taking over more debt for the period of the loan, you know. So,
Correct.
so those are things that you need to weigh in before jump and buy a property. What are the pros and cons? And all these, because it's insured mortgage, what
Mhm.
that means is the insurance premium also goes up here. So that means you have to pay higher insurance. So insurance will kick in if the buyer defaults making the payment. So
Mhm.
so it protects the lenders. So that way, it will stimulate the economy is what the government is thinking. But it could drive the price also high with
Correct.
more buyers and with the demand and supply. Um, and we will have to wait and see. So just to let you know about the 30-year amortization, this is primarily for the first-time home buyers, new builds, and not for investors.
Mhm.
Even the same for the insured mortgage as well.
Okay.
So this is basically so the people who are already bought a property and they want to upgrade, and they buy a new build and they use that new build for their primary residence, then you qualify for a 30-year AM. Um, so so those are some of the high-level pros and cons that we want to bring to your attention.
Yeah. Yep. Yeah, I think yeah, these changes. Yeah, I think it's stimulative is what I take it. Personally, it's spurring the demand is what I'm seeing, especially with the changes with the capped. I mean, insured cap changes, right?
Right.
And this is one of the example where the government is doing their best to support the home prices in Canada.
Right.
Uh, yeah, that's one thing. Okay. Anyway, this is good. I think we have discussed what we wanted to. Anything else, Max? You
No,
you really want to
no, I think we
add
covered
here?
what we want to cover in this special episode. So we'll be back
Yeah.
with more market updates in the coming weeks. Until
Yeah.
then, wish you all a happy holidays, Merry Christmas, stay safe, and enjoy your holidays. Stay safe.
Stay safe. Happy holidays. Bye bye.
Okay.
Okay. കുഴപ്പമില്ല.